to share with you right now will change a lot of things in your trading journey as a Forex trader. So my life changed significantly when I understand how to identify market structure properly and understand the right time frame to use them. I want you to stick to the end of this video because I promise you are going to learn something new from it. It is different from all you have been hearing about market structure. Okay, so because come to think of it, you have been hearing about market structure and you're applying it, but it is not giving any significant result. But what I'm about to show you in this video will change a lot of things, your view and understanding of market structure. So without wasting much time, let's dive into it and I will show you how to identify market structure, the right time frame to use it, and how to use it properly. So if this is your first time of seeing my channel, please like and subscribe to this channel because this will help you to get more of our videos, and it is also a good way to help us promote this channel. So let's get down into it and I'll show you about it. So to begin with, in Forex trading, we have three major market structures. Okay? All you see in your chart are three major market structures. So anytime you open your chart, any part of it that you are analyzing, the possibility is that you must see either one of these structures or maybe two of them, but at any moment there must be one that is going on. So your ability to understand and be able to identify these structures on your chart will help you because it will give you the information of what is going on in the market and what the buyers and sellers are doing, and for you to follow the same trend. So first one is uptrend. Uptrend is very simple. Uptrend simply means when the market is creating this kind of structure. Okay, if you look at this kind of structure, you can see that the market started here, moved up to this point, returned here, moved up to here, but this is just how you see it in real charts. But this particular movement is just showing you a continuation because when the market returned here, it didn't take out this particular low. So it just continued and take out this particular high that it created initially. So let me just say generally, the market moved this way. It created this high, come down, created this high, then comes down, created another high, come down, and this way. Now, there's something that you need to notice in this particular movement. Normally, in Forex trading, you call it a high, higher low, higher high, higher low, higher high, and all that. But there's something that you need to take note of in this particular market structure called uptrend. Now, when the market created the first high, it came down. It didn't take out this particular low that was first created where it started. Then it moved up to this point, returned again, didn't take out this particular low. Then it keeps going up to take out the former high created. Okay, that is the initial high. And when it took out the initial high, it will return back and still wasn't able to take out this particular low. Okay, then it went up again. It continues creating this kind of structure. So when market is creating this kind of structure, it is in an uptrend. It means the buyers in the market are very strong, and all you have to be looking for in this kind of market structure is just buying. You understand? Then the second one is a ranging market. So a ranging market is a situation where market looks as if it is in a channel. It is bouncing off up and down from a channel. Now look at this. Market started here, it moved up, comes down, create this, comes down, create this, create this, create this. But the main thing I want you to focus on is at this particular point. Now if you notice, market came here, then didn't break it, returned, it keeps bouncing off from this channel. So when you see a market in this form, it shows you that at that particular moment the market is ranging, and all you have to look out for is how to trade ranging market. Okay? How to take opportunities anytime it returns to these points that it is bouncing off from. Then the last market structure is downtrend. Now downtrend appears when the market is going down. Okay, it is just opposite of an uptrend. So when the market is going like this, comes down, then goes like this, comes back, goes like this, it is a downtrend because market started here from this high, created a lower low, then comes back to create a higher low, then comes down again to create a lower low, higher low, then in this form. So when the market created this, when it returned, it didn't take out this higher low, then it went down again, created a lower low that is taking out this particular low, then it returned back again, still not able to take out this particular higher low that is here. So when you see this kind of structure, you know that the market is in a downtrend, and all you have to be looking for is a down opportunities, like shorting opportunities. So your ability to know the market structure is your first step in winning in the market. That is your first step of not entering wrong position. So now I'm going to show you how to identify these structures in real charts. But before we do that, I want you to understand that in higher time frames, these particular structures are more clear than in lower time frames, because in lower time frames like 1 hour, 15 minutes, 30 minutes, and so on downwards, you can see it there. But because we have a lot of candles in this type of time frames, these structures can be formed within short period of time, and it is very difficult to determine the general behavior of the market from this type of time frame. So we are going to start with high time frame, where the market structures formed in this time frame give a strong message about what the market is doing more than the lower time frame. But you can use what you see in high time frame to determine what will happen in lower time frame, and be able to go to lower time frame and still use the same market structure to identify the right time to trade and how to enter the market. So let's get into it, and I will show you, starting from high time frame, how to identify these structures, and we'll scale down to lower time frame and know how to use it to trade. So let's go. So this is how you identify these market structures. First thing you need to do is to open any chart of your choice. Okay? Just go to your TradeView or MetaTrader 405, anyone you are using, open any chart of your choice, then go to high time frame like weekly time frame. For instance, right now, if you look at this corner, you can see that this particular chart that I opened is USD Canadian dollar. Okay, and this is the weekly time frame. So when you get to the weekly time frame, what you need to do is just to zoom out like this. Okay, it will show you a clearer view of your chart. Then the next thing is to identify those market structures. Let me first of all start from this end. Now, looking at this part of the market, this small part of the market, you can see that the market is obviously uptrend. Why? Because the market is creating a higher high, higher low, higher high, higher low, higher high, higher low. So all you need to do when you identify this kind of structure, uptrend, is to look for buying opportunities. So anytime market creates a high and a return to create a higher low, then you look for a good opportunity in lower time frame, like 1 hour time frame, 30 minutes time frame, 15 minute time frame, as the case may be, to enter the market to continue going up. And once it takes out the high already created, that is the previous high, and create the new high, then you wait for the market to come back and give you another opportunity again to enter a buy. So all you have to be looking for in this kind of market structure is buying opportunities. Then let's look at this part of the market. Okay, let me kind of zoom out a little bit so that you see it clearly how it is. So now looking at this part of the market from here up to this point, you can see that the market is obviously in a downtrend. Why? Because the market is creating a lower low, lower high, lower low, lower high, lower low, lower high, lower low, until it finally broke this structure and take out this high. So what does this tell you? That anytime the market creates a lower low and come back to this lower high, then you have to look for opportunity to enter the market, going lower again to take out that first low created, and the same thing until the market changes character and take out the previous low. Now, let me show you this part of the market, because this is where we are going to use for our analysis and our learning. Now, look at this part of the market. I want you to pause the video maybe for 1 minute or 2 minutes to look at this particular part of the market. What do you see? Okay, obviously, you can see that the market is in an uptrend. So all you need to do is to draw your trend line. When you draw your trend line, you will notice that the trend line touched several parts of this up movement, and it is creating higher high, higher low, higher high, higher low, higher high, and so on. Okay, until the market broke structure here. But I want you to look again in this particular trend and tell me what else do you see in this particular trend. Just pause the video and tell me what you see. I guess you saw something like this. So what does this tell you? The market was in ranging form in this particular part of the market. So that's why I told you that anytime you open your chart, you will always see these structures, maybe 2 at a time or just 1 happening. So if you look at this particular movement, the general movement of the market is an uptrend, okay, but in between that uptrend, a ranging market appeared. So if you don't know how to identify a ranging market, you may make a lot of mistakes here that may make you to lose money in this particular part of the market trend. So, but if you are able to identify that, oh, at this point the market is ranging, then you use how to trade ranging market to trade and get opportunities in this part of the market. You understand? So what I'm going to show you next is how you can identify opportunities from lower time frame. So before we do that, this is how you trade a ranging market. So once the market comes to this point and come down again, first the market, you already know that the general trend of the market is uptrend. That is the first thing you need to have in mind. So when the market returns like this, you need to just enter a buy. Then when it hits this point, you enter a sell, okay, waiting for the market to return and touch this particular trend line that shows you the general trend of the market. So once the market touches this trend line, you have to wait for a confirmation to show you that the market wants to continue upwards or it wants to break that trend and go down. So if it shows you a sign that it wants to continue going upwards, then enter a buying market again, because generally the market is in an uptrend. So this ranging market here is just another market structure that's formed in between a particular trend. So it's good to know that. Then looking at this part of the market, what do you see? So it is obvious that the market has started creating something else. I want you to take a look at this. So it is quite obvious that the market has started creating a lower low, lower high, lower low, lower high. So what you have to look out for at this particular moment is selling opportunity, unless market breaks this particular resistance trend line. Okay, if market breaks this resistance trend line in this form, let me show you. If market does this and return like this, then you know that the market wants to continue in the general trend of the market structure, which is uptrend. But if the market does the opposite, if it does something like this and then goes this way, then it shows you that the market has already changed structure, and all you have to be looking for is a downward movement, a selling opportunities. Okay, this is how to identify market structures. Okay, let me quickly delete this and this. So the next thing is to go down to a weekly time frame, go down to daily time frame and see how the market looks like in this particular downtrend that is creating here. This will be our point of observation from lower time frame. Okay, let me quickly mark it out with this rectangular shirt. So this is exactly what we are going to study in daily time frame and 4 hours time frame, how we would have gotten opportunity to be in this particular market trend. Time frame, I want to show you something very, very important that you need to know. Okay, this point that I marked out from weekly time frame, if you look at it, you will notice something. You will notice many market structures here. For example, this direction, you notice downtrend. This direction, you notice uptrend. Like this, you notice downtrend. Okay? This shows you that the more you go down in time frames, the more you have candles in the market, and the more candles you have in the market, the more market structures that you will see. Okay, and when you go down to a very low time frame like hourly time frame, or maybe something like 30 minutes time frame or 15 minutes time frame, it will become like a noise. You will no longer be able to identify the actual direction of the market. So that is why it is important to check the direction of the market from hourly time frame to know the main direction. So let's say, for instance, the market is trading at this particular point. Okay, when the market created this higher high here, so we already know that the market is in an uptrend, and because we know that the market is in an uptrend and the market has created a higher high, So we would expect the market to create a higher low, to come down into this particular order block here to create a higher low. So because you are expecting the market to come down into this particular zone to create a higher low, then the next thing is to expect a downtrend. Okay, a small downtrend in form of correction before the market continues in this direction. So because of that, so you'll be expecting something like this. Okay, so but I usually trade it in form of channel, okay, because it usually bounces off like this in most cases. Something like this. So now, how do you use this as an opportunity to trade from lower time frame? Because identifying the structure of the market too in lower time frame will help you to know how to enter the market. Now that you know that you're expecting the market to reach this particular order block here, okay, and the market has traded at this particular point and broke structure at this particular point. Okay, let me show you. This structure broken at this particular point will be very obvious in 4 hours time frame, okay, which I will show you in a few minutes now. So let's go down to 4 hours time frame. Okay, this is 4 hours time frame. So you see how everything became more clear, because right now you have even more candles in the market, and with more candles in the market, the more structures you will see in the market. So you see that this particular downtrend here became more obvious in this particular 4 hours time frame. So since you have already known the general trend of the market, where you're expecting it to come is at this particular point, and the market is trading at this particular point, and finally here it broke this particular structure and also took out this particular low here and returned into this neckline, as you can see here. What does that tell you? It tells you that it's time to go short, to reach that particular zone, that particular block I showed you from daily time frame, where you're expecting the markets to come. So that is why you will take a short position here. That's why you would take a short position at this particular point. Take another short position at this particular point. These are 2 opportunities you will have gotten in this particular market. Something like this. This one. Something like this. Then when market comes at this particular point, okay, you have to wait for the market to react and give you a sign, the direction it wants to go. Because from higher time frame, the market is in an uptrend, and there is a key zone, which is that order block we're expecting it to come. And now market has reached that particular order block. So you don't make the mistake of trying to go short again, because if you go short again without any confirmation, you may lose. For example, if you entered another short here, you would have lost it, because look at what happened. Market traded and came above this particular resistance trend line, okay, and retested it and created a higher high, which took out this previous high here, okay, and was not able to take out this particular low. Let me show you. This particular low you are seeing here, the market was not able to take it out. So this is a confirmation that you shouldn't continue downtrend. So then what's next? You look at this. This is another channel. This is another market structure, uptrend. What do you see here? This is an uptrend. I usually draw it in form of a channel. This is more like another channel like this, like the one I showed you initially. So when the market goes like this, then return, it's now still creating a higher high, higher low, higher high, higher low. So the market continuing in this direction up to this particular point. Now remember that the market just changed structure. Okay, the market is about to go down with this particular trend line, resistance trend line, withdrew from weekly time frame, because market is rejecting at this particular zone, this resistance zone. So that's why we're expecting the market to continue going down. it has not been able to take out this particular high, this initial high here, this initial high here. So what do you do? So when market comes here, what else do you see? Do you see this? Another downtrend. Okay, so when the market goes down like this, it returns here, you enter opportunity like this, like this. So this is how you trade with market structure. Market structure, when you understand market structure from high time frame, the best time frame is weekly time frame. Understand the market structure for weekly time frame, then confirm it from daily time frame, and know the target. Know the target, the point you're expecting the market to come, and follow any particular structure that is trying to go to that particular point. When you trade market structure in this form, I promise you won't make mistake. Your level of maybe mistakes or losses in the market will reduce significantly. And also, it is very important to note that you don't trade market structure just alone. Okay, you trade it with other strategies like support and resistance levels. You trade it with other blocks and other things. So I want you to stick to the end of this video, and also you will see my next video about advanced market structure, how you can use market structure in combination with other structures to get bigger opportunities. If this video was helpful to you, please leave a like on the like button and also subscribe to the channel. Also, I have another video on advanced market structure where you can use other methods, other strategies like other blocks, fair value gap in combination with market structure to enter a market in more advanced way. So the video is linked to the end of this video. Just click on it and you will learn more about market structure. So see you in the next one and remain profitable.